It would be cool to see more competition in the marketplace because, to the point, your
Definitely.
very first point is we run higher profit margins here, and that's because we're lacking the competition that's needed
Totally.
to help beat down some of the costs.
Why does this happen in Canadian industries? Airlines, same way. Communications, same way.
They just acquire every single industry.
Yeah.
I think it's heavy regulation, and then ends up favoring the ones that already have everything in place. They lobby the government to continue to add more regulation. And then they stay in power. And then whenever anyone tries to come in and then add all this new complexity to their business, it's all new to them. So it could take years. It's a battle. So it's an uphill battle to try and get in. And then they end up just giving up. Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal and Ryan and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 64, the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, how you making out?
Extremely tired.
Same.
Christmas is a weird thing as an adult. So it's less exciting and more exhausting.
I am hanging on by a thread right now. We're recording this right before Christmas. This probably won't come out. Until mid-Jan, I'm guessing. But we're getting ahead of ourselves. We got lots on the go. Holidays are upon us. Just beating my head against the wall with trying to get this MIC finalized. Yeah, as we were just talking about. My head is absolutely spinning, but hopefully it'll be worth it.
I think so. I think we were just talking about it, but most of you guys probably already know, but MIC is a mortgage investment corporation, and we're in the process of doing that for our company Keystone. But to Ryan's point, there's a ton that he's taking on to get through it. And we were just talking about how I think it's great because it'll provide a ton of exposure and it'll introduce us to a lot of new people. And I think
legitimacy of a fund as well. So
yeah, access to capital, hopefully
registered investments, lots of benefits. It's just, anytime you go through the whole securities commissions in multiple provinces, there's a lot of compliance required and a lot of different boxes. Yeah, exactly. So we're in the thick of it right now, but hopefully by the time this comes out, we'll be
at that point.
Yeah, which is very exciting. But
very close at that point. Yeah, which is very exciting. But
it's been a grind.
I said to you before we turned the mics on, I have a few friends who had IPO'd, and now they're like, I would never do it again. Yeah. It was a bucket list item. I'm glad I got it done.
Yeah.
But I've now met enough people that I don't need to do it again to get the capital I need.
For sure.
And it changed my life in the sense of it's a different dynamic to run.
Yeah. And I mean, we're not going to quite the extent of an IPO. Obviously it's not a public entity, but it's still, it's a lot of new and unknown.
Yeah,
but we're getting through it, and honestly, it hasn't been that bad. It's all kind of coming together now, right? So all the pieces have to fit, and
it's a weird season to be doing it too.
Yeah, exactly. Yeah, you're depending on one thing for another, and then we're going through the Christmas season, hoping to launch in January. So, bit of craziness, but it'll all be worth it, like I said. So,
100%.
So we got a kind of an interesting topic today, Neal.
Yeah,
we're going to talk about if banks can go bankrupt. What do you think?
Yes,
they can.
Yeah.
What about in Canada?
I mean, yes, but I don't think that they can't go bankrupt.
Right.
But they're going to get bailed. Will they? And will the government relentlessly bail them out? And this is even in the States. What you've seen in the most recent one that everyone knows about was SVB.
Yeah.
Which we have on here, and we'll talk about that. But
yeah. To your point, I mean, we're going to get into some of the examples of the global examples of bank failures. Obviously, we're in a time of economic uncertainty right now. You hear a lot of talk around depositor protection and stuff, and you hear that more and more with Canadian banks, and I think especially since SVB, sorry. But yeah, we'll dive into SVB, which happened in 2023. We're going to dive into the 2008 financial crisis, which I know has played a big part in my early career, and we'll talk about why the Canadian banking system is uniquely resilient.
Yeah.
But before we go in, did you have a chance to look at this article about Banco Santander?
No, I didn't actually.
So I think I get some notes here on the backside there, Neal. But so this came through Canadian Mortgage News a couple weeks ago.
Yep.
And this bank, which I can't recall, I think they're Spanish, was looking to break into the Canadian market, and you don't hear that every day. We got our big five, big six, and they tend to dominate our market. The 6 of them combined earned $54 billion with a
Yeah.
B in 2024.
I'm sure there's some creative accounting to bring that number down too.
And Santander wants a piece of it.
Okay.
Okay. So Canadian banks actually have a higher margin than in the US and European counterparts due to the hefty fees and strong customer loyalty. Surprise, surprise. Except not at all.
Yeah.
When's the last time you heard of someone leaving their bank? Canada?
Yeah, that never happens.
Never.
It's kind of a pain in the ass.
Mm.
That's the thing. Like, it's not an easy
They make it
thing.
impossible.
It's not an easy thing to swap.
I'm sure people threaten it all the time, and whether it doesn't actually happen.
I threaten it about twice a week with mine.
Totally.
Yeah. It's
Totally.
just like,
and when have you done it?
like, we can't clear this check. And I'm like, I'm going to leave.
Yeah, exactly. Yeah. I know people do it with different products, right? Like different line of credits and stuff like that. You bounce around, but like for your like core banking, it's, it almost never happens.
Yeah, there's a lot of paperwork involved with moving everything around. The thing that out of this whole thing off the hop that I find interesting is I feel like you see a lot of Canadian banks making entrance in other countries.
Yep.
I feel like, again, to your point, you don't see as frequently banks making an entrance into Canada.
Totally.
And I think we've even had some that kind of leave. Like they come to make a presence and then they slowly start pulling it back. Like I think HSBC was one that had a bit of a presence and then I think it's kind of pulled it back a little bit.
Yeah. So, I mean,
to your point here, some of the challenges with them coming in, over 90% of banking assets are controlled by the big 6 in Canada. Obviously, very difficult for new entrants to come in.
Mm-hmm.
And Canadian consumers face high switching costs as well, right? So there's not much of a competitive advantage here from Santander based on off the hop here. But their goal was to come in and basically offer no fee, high interest model, like an open bank model, leveraging deposits to fund its auto lending business already operating in Canada. That's the goal. Okay. So they're following successful international expansions, but they've got, regulatory challenges. And of course, is the market actually going to latch on to them? Right.
That's interesting. I wonder what, again, as a client, I'd be a little bit concerned being like, okay, so my deposits are being used to do auto lending. What risk am I running as someone that's
totally
holding my funds with your bank?
And like, are people actually going to be early adopters of this, right? Like is the high interest model? Like, I don't know. I just don't see it, right? Like,
we're in an interesting time where I think you could actually purchase customers. I think if you like with like I remember in the past, it'd be all these promotions like sign up now, you get an iPad, sign up now, you get $500.
Totally. Well, Simple's doing it like crazy. And I know they are gaining massive market share. They're I forget what their valuation came back in the billions a couple of months ago, but it's a big number. They've done a really good job of that, and it's an online platform.
Attacking the younger market, I feel like.
Yeah, exactly. But I mean, this has happened in the past, right? Like we had ING, 25 years ago.
Yeah.
And I forget what their motto was, but it was something about...
Didn't they have some like British dude in the commercials?
Yes, exactly. Yeah, it was really catchy. Yeah. But I don't know a single person who actually went over there. And then I think Scotia actually ended up buying them. Anyways,
like
right?
Their book till they had here. Yeah,
exactly. And then HSBC, of course, did a decent job cutting into market share. Would have been distant to any of the big 6, of course, but and of course RBC picked them off last year, right?
I'm surprised HSBC didn't do better because I feel like they're more international.
Yeah,
and where we do have a heavy percentage of immigrants, I feel like it'd be like automatic.
Yeah,
if you're able to use your bank at home, and then
they have their whole loss leader model with their mortgage sticker prices too, always being the lowest in the market. But
yeah, I think obviously they did something decent to get a massive acquisition price from RBC, but yeah. So this is interesting, but I guess I'll believe it when I see it when they start
getting some more traction.
It would be cool to see more competition in the marketplace because to the point, your very first point is we run higher profit margins here, and that's because we're lacking the competition that's needed to help beat down some of the costs. And there also I think could be some interesting products like.
Why does this happen in Canadian industries? Airlines, same way. Communications, same way.
This is
just acquire
every single industry.
Yeah,
I think it's heavy regulation, and then ends up favoring the ones that already have everything in place. They lobby the government to continue to add more regulation. And then they stay in power. And then whenever anyone tries to come in and then add all this new complexity to their business, it's all new to them. So it could take years. It's a battle. So it's an uphill battle to try and get in. And then they end up just giving up. I also do think Canadians like using what they know and what's already Canadian. Like we talk about that with our business here. One of our competitive advantages is that we are from Atlantic Canada.
Totally.
Like there's been a million other lenders that have come to Atlantic Canada and they struggled because here everyone feels like they're like the Ontario money.
Yep.
Versus this is the same kind of concept, I think, as when these places come from. Like even like the name Banco Santander, like I'll be honest, it doesn't strike confidence into me
Totally.
as someone. I'm like, well, the Canadian banks, I feel
Yeah.
it's TD Canada
Well, I
Trust.
mean,
Like I feel
look at
good
the
about
names
that.
of them, right? Yeah, exactly. Royal Bank of Canada,
Yeah,
Scotia Bank, or the Bank of Nova Scotia, right? Like it's the Bank of Montreal.
this would stress me out.
Yeah.
And then the fact that they're back in auto loans, I'm like, okay, so 90% auto loans probably have less equity in the vehicle than the money that's out there. So,
Yeah.
I don't know. Anyways,
Yeah.
it'll be cool, interesting to see.
Yeah, for sure. So let's dive into it, Neal. Here, so
Okay.
let's start by going through. Why do banks fail, right? So
Yeah.
let's kick it off. Go way back. How many years ago was that? 16 years ago, the 2008 financial crisis.
Jesus.
Crazy.
Wish I
So
was
what
investing
happened, right? Not in U.S. mortgages, not at that time at
No.
least.
Yeah, true.
So what happened? So the crisis stemmed from excessive risk-taking in the U.S. housing market. And if you haven't watched the movie The Big Short or read the book, both fantastic. Highly recommend it.
Yeah.
So what the core concept there was mortgage-backed securities, or MBS. They were created by bundling home loans and selling them to investors as bonds, right?
Yep.
Banks and other FIs issued risky subprime loans to borrowers with poor credit, and they were repackaged as safe investments. So basically, the way they did it is they bundled hundreds or thousands of these together and said, well, this is now diversified, so this B-rated product is now a AA rated product, right?
Yeah.
So and that's how they sold it as a safe investment. The problem was they weren't. Borrowers began to default en masse, and MBS, mortgage-backed securities values plummeted, and it caused a domino effect in the market.
Yeah. And so the main underlying thing, the main reason it failed, and you said here, is the people they were lending to were not good. They were doing poor. There was a lot of available capital, and it was working for a while, so that to make more money, they continued to just give out more and more loans. And that's something I remind a lot of my friends this. I'm like, the bank is a business and their product is money. So like they want to give out the loan. So you don't, as long as you don't give them a reason not to, they're going to give it to you.
Yep.
And in this case, these businesses, these banks wanted to get out as much money as humanly possible. And so they got to the point where they just weren't doing the proper checks on their clients, and they were just giving everybody a mortgage. And then typically these would be considered poor quality, low grade mortgages, B, C mortgages. But then as Ryan said, they then packaged them. Maybe they threw a couple AAA mortgages in there and called them a diversified portfolio, and were able to increase the rating. But even I remember the news looking at it, like they were pressing hard on the rating agencies to basically falsify what the portfolio should be rated at.
Yep.
Like if it should have been rated at a B or maybe a B plus, they were like, no, it's like a AA. And this way they could get it sold and off their book. And then for them as a bank, it's genius. Like it eliminates the risk for us.
Yep.
We just immediately get paid. So as quickly as we can get these things out, package it up, put a fake stamp on it, and say this is a high quality product, sell it off, get it off our books, and now we're safe and we win and we make a bunch of money.
Totally. Yep, absolutely. So what happened in terms of the banking system? So Lehman Brothers, a massive name in the U.S., collapsed.
Yep.
Fannie Mac, Freddie Mae as well. Bear Stearns also as well collapsed, but they were bailed out by the U.S. government.
Yep.
Of course, banks faced serious liquidity crisis, and then governments worldwide were forced to inject capital into the U.S. market. Right?
Yeah. This was kind of what I was saying when you say can banks go bankrupt, and they can to this point, but then exactly to the next point is the governments end up backing them.
Too big to fail.
Too big to fail, because there's a couple ripple effects that come from it, but it's also get the confidence in the American banking industry. If that gets lost, the damage that's going to have on the American government and the country as a whole is way worse than them bailing it out.
Yeah.
But it does suck as a consumer. You're like, these guys go out, make tons of money, do fraudulent shit, screw it all up at the highest level, and now we all have to pitch in billions to help fix their problem that they've
Thanks,
created.
Wall Street.
Yeah,
Bay Street.
Exactly. But as much as it hurts, if you think in the long run, if they didn't put those billions of dollars in, you would actually be in more pain.
Totally.
Than them bailing
the
these
market
people
as
out.
a whole would be in major trouble.
Exactly.
So just to wrap up on the 2008 financial crisis, from a Canadian angle, we weren't really severely impacted from a banking perspective. I know other industries were seriously impacted, but so Canadian banks avoided subprime lending and risky mortgage-backed security exposure, but the government did introduce a temporary mortgage purchase program to stabilize the market.
Canadian government?
So apparently, yeah,
They just buy out
yeah,
your house?
I guess.
Yeah, I don't know. I didn't have additional data on this, but that is quite interesting that they were like preemptively did that. I have to look further into that, but to see what it was. But you know, quite interesting that they would step in.
Before there was even any problems, just to ensure nothing went sideways, right?
That's good. I like that. It's once
Yeah.
if it's a problem, it's bad. Whereas this is like if people start to get in hot water,
Yeah.
they can just be like, all right, I'm going to pass the puck and get the heck out of here.
Yeah, I guess so. Neal, why don't you take us through the big one in 2023 more recently here, Silicon Valley Bank or SVB?
Yeah. So I'm sure a lot of you guys remember that because it was so recent. It didn't actually get as much press, I feel like, as it.
It did for a little bit, but I feel like there was a lot going on
Yeah,
then.
what else was going on at the exact same
I don't
time?
know. Something
Were
crazy.
the stocks getting pumped or something?
Yeah, there was
It
some.
was like a meme stock moment.
Yeah, probably.
Anyways, Silicon Valley Bank had a collapse. They were catering, as their name suggests, to tech startups and venture capital firms, relying on massive deposits from these venture capital firms and these tech companies. And so they had a very relative, I think their average deposit would have been much higher on average than most banks. They had a very concentrated client base. During the pandemic, SVB invested heavily in long-term U.S. Treasury bonds, which are typically considered to be very safe, but do put you at a lot of exposure if in the climate of lending, if rates go up or down. A lot, which again, coming into the pandemic, they did. Yep. And when rates rose sharply in 2022 and 2023, in the States, they, just like Canada, went very high very quickly. The bonds portfolio value dropped immensely, creating significant unrealized losses on their books. And so that's, as you guys know, bond values, the actual bond has a value. As much as it just pays a rate, it actually physically also trades with a dollar value. And so when those rates move, it causes the values to change. And so in this case, on paper, they had lost a fortune, even though they physically hadn't quite yet until it's realized. But by doing that, everyone who had money there started pulling their money out because they're seeing that the bank has a huge loss coming down the pipe. So you had a run in deposits. Clients are withdrawing their funds, forcing Silicon Valley to sell their assets at a loss to pay out these clients. So basically, if you think about it, people have their money in. Silicon Valley Bank had invested it. They see that people start seeing that the investment's in bad shape. They want their money back before the investment loses all its money and potentially go bankrupt. And then by doing that, they force Silicon Valley Bank to sell their investments to pay them out.
Yep.
And when they do that, they actually then are forced to realize the loss, resulting in a bankruptcy.
Yep. Little bank run.
Yeah. And I think it was kind of like an old school, like, I remember the news, like there's literally lineups of people just physically waiting at the bank to go in to make their withdrawal.
Yeah.
Like it was like an old school, like it wasn't like people were going online. Like you had to physically go there and do it.
Yeah.
But as we know, government did step in, as they always do. Who ended up buying SVB?
I don't recall.
Someone did buy SVB for like pennies on the dollar.
Yeah, it was nothing.
But what came of it is additional regulatory intervention from the FDIC, and it also highlighted the dangers of interest rate risk and lack of diversification. So to put in such a large percentage of your portfolio into one thing, and also carry such large clients. And when we say large clients, like we're talking multi-billion-dollar clients, right?
Yeah.
These startups had massive amounts of cash. The other thing that happened at the same time is, on top of having rates rise and people getting afraid that the bank's gonna be in bad shape, the tech world started taking a beat down and needing they started to need their money too.
Yep. Yeah, so First Citizens Bank was the one who purchased it. They purchased $72 billion worth of assets from SVB at a discounted price of $16.5 billion.
That's crazy.
And they handled basically the failed deposits, the $56 billion in failed deposits as well. So I assume that was after the government had already stepped in and gave some sort of assurances there. But they would have assisted with that process, I'm sure.
I wonder if now, as the rate cuts start happening, this is when these guys are start making the money on this investment.
Yeah, totally.
Like they're starting to finally see,
because Silicon Valley Bank was built on that, weren't they? Like, didn't they come in? Didn't they rise to prominence during the early tech days?
Yeah.
And rates have been ultra low pretty much since then, right?
Yeah. So as the rates start to cool off again, except the States hasn't been nearly as aggressive as we have. But again, for us back here at home, it didn't really have much impact.
Yeah.
I think the biggest impact it had is it put a little bit of fear maybe in some people, and recognizing that like there might be some pain in the water here and what's about to come.
It could happen, right? Like it just opens your eyes a little bit. I don't think we've seen something like that in our lives.
Yeah, exactly. And then there's also the same thing as what I just said, but OSFI had stricter regulations on capital reserves to help mitigate risks, like what we just saw there. The other big reason I think that you see, well, and we kind of alluded to this earlier, that you're going to see governments step in is sentiment. Like if people start thinking this is going to happen with multiple banks, the States, again, I think is way more prone to it simply because there is 1,000 brands.
Totally.
And they're privately operated.
Yeah.
That people start freaking out that they're all going to start collapsing. And again, people just withdrawing their money would cause them to collapse. Like it's not like banks that didn't even have a problem can be forced into falling apart if everyone just pulls out their money.
Yeah.
Like, you know what I mean?
It's crazy.
It's a weird concept.
Weird. Yeah. Yeah. So what sort of protections do Canadians have on their deposits at banks? So the Canadian Deposit Insurance Corporation, or CDIC, protects up to $100,000 per insured category. And I know other institutions offer more than that. I think up to $150,000 in certain areas. But the key difference here, the CDIC limits are more conservative than the FDIC in the U.S. of $250,000 per insured category.
That's a huge difference.
That's a massive difference.
We're also talking 100K Canadian versus 250K US. So that's
totally.
That's like 325,000.
Exactly.
That's
massive.
This does scare me a little bit because I think there's a lot of people that have more money than that.
I was just about to say the same thing. Like, I don't know. You know, we don't want to offer financial advice here, but like if you got $1 million cash in one bank account,
you shouldn't do that. Yeah. Again, not financial advice, but like think about it, diversify a little bit, right? I have heard of people.
It is weird to me also, though. A bunch of people have like 100K, 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 100K in each of the categories.
Yeah.
It seems weird as hell.
Yeah.
Like, why can't they just be like, anyways, I don't know. I guess it's an interesting thing, but yeah, this actually, must get stressful for people if you have like $25 million cash.
Totally.
Like, there's a legitimate risk that it could just get lost.
You have to, just further reason to spread your money around to multiple
Keep
areas,
your money in
right?
your mattress.
Yeah, exactly.
This is where that starts to make a bit of sense again, is you take it out. But yeah, you got to have multiple investments.
Yeah.
Some people carry physical gold deposit boxes.
Yeah.
As you start to have
it around, right? Like it's, crazy to keep it all with one spot just because it was, we've talked about it all the time because it was your dad and your grandpa's and your grandma's bank, right?
100%.
Yeah. Anyways, OSFI also mandates liquidity buffers and does regular stress testing to simulate worst case scenarios as well. I wonder what that looks like. Canadian banks face less risk of sudden liquidity crises due to diversified funding sources, which is interesting.
Yeah.
And basically, just some lessons learned from 2008 and 2023 market crashes. So Canada's focus on prudent lending,
i.e. tighter underwriting standards, which is certainly factual, has prevented systematic risks. And SVB's collapse underscored the importance of managing interest rate risks, something Canadian banks are better equipped to handle.
With all that being said, and we've talked about this before a little bit, is that there's starting to be some concern because the private banking industry is growing so much in Canada that are we going to get, like, in maybe 20 years, maybe 10 years, in a position that we're at risk of some of the things that we're saying that we're not at risk with in comparison to the States, because as much as they're like, we're focused on prudent lending, tighter underwriting and all that, because of that, people don't just go, okay, well, I guess I'm not going to do it. We're just going to find another way to do it.
Yeah.
And so you're getting all these institutions that aren't needing to follow as many regulations.
Yeah. But what I think personally is that there's just going to be
more regulations introduced to cover all the privates
in alternative and private institutions.
It's funny because I basically, for back I bitch about it because I feel like there's more opportunities for unique products, financial products in the States, which can be really beneficial. But it's always a double-edged side. By having such tight standards in Canada, again, it has a positive impact because people are more willing to invest their money. Not all, obviously, most people invest in the States, but there is a percentage of people that are willing to invest here, and it actually does have some benefit to us because people feel a lot more safe about their investment and feel like it's more secure in comparison to some countries. Which I think is part of the reason our real estate has gotten as pricey as it has.
Yep. Neal, why don't you take us through what would happen if a Canadian bank was to fail?
Well, it'll be a shitstorm.
Yep. Hopefully it's not our bank.
Yeah. I'm just going to keep 100K. So on a regulatory basis, OSFI would seize control of an insolvent bank and start managing the assets and working on obviously trying to get the situation sorted. They'd either figure out what to do, whether it's a restructure, merge, which I think is probably what most likely would happen. They'd merge with one of the other big ones, or liquidate assets. I don't see that being a likely scenario in Canada.
Worst case scenario, realistically.
Yeah, I suspect one of the there'd be a program that would step in to fill in the void. the impact on someone who has their money in there is you'd get CDIC insured payouts for the insured amounts.
It says usually within days. If we had a full-size bank go down, how much cash does CDIC keep on them?
I wonder what this all the
It must
time.
be a massive number.
They must have a stockpile.
Yeah.
I have no idea. Like, yeah, I was seeing what that would like.
I wonder if their house next door to the Canadian Mint in Ottawa.
They're just paying people with physical
There.
cash.
Yeah.
This part is the craziest one to me. Is uninsured amounts could be lost or it could be a delayed repayment. I still don't think. I think it'd be a super stressful experience, but I genuinely believe that they would pay it all out.
They come through 100%.
Which, I mean, imagine that they've created this confidence in us, though.
Exactly.
There's a lot of countries in the world people don't feel good with that.
Economy is based on the strength of these banks, right? Like, can you imagine? They're just like, sorry, RBC holders, 30% of the market,
That sounds insane.
Yeah.
There's no chance. Chance.
We couldn't make up the gap. And you guys are screwed.
It does happen. Like, I've talked to people before that have lost all their money, not here, in other countries.
Yeah.
And they've lost all their money in a bank.
It's insane.
Like, that would be so
terrifying.
Yeah.
Right?
Yeah.
There's just so much trust, like deeply ingrained trust here, right? You just can't even picture that happening.
No, they're a part of the government effectively.
Yeah.
That's exactly why. So to your point, why it's around Canada is these banks are massive. The big six are so big, and they're too big to fail in the sense that they're too essential to allow them to fail.
For
is
sure.
really what that words out as. Smaller institutions like credit unions are provincially regulated and have separate insurance plans.
Mm-hmm.
They each offer different packages. I also think one of them would likely get bailed out in the event of having something like the only ones I could see the government letting slide right now are just privates, honestly.
Yeah.
And we have seen a few that have gone sideways. There's one, what was it recently in Ontario that they weren't following up. Or were they investing in real estate? They were investing in real estate, weren't they?
Yeah. I can't remember the name.
Yeah.
Look it up.
But anyways, so if a Canadian bank failed, it would be an absolute bloodbath.
Yeah.
It would be a lot of stress. But I don't think you'd ever get to the point of it actually openly failing. Like, if things started going bad, I think it'd be the same idea. I think Canada would step in early.
Yeah.
And as like a depositor, you'd probably have little to no.
Yeah. The headline risk alone would be.
That's what I mean. The headline risk
massive.
Would be
yeah.
so crazy.
Yeah, for sure. So just to wrap here, Neal, so how can Canadians protect themselves? So we talked about it already, but diversify deposits across different institutions.
Understand the CDIC limits and ensure your accounts are insured. Be cautious with uninsured investments.
Of course, mutual funds, stocks, all those different things, alternative investments.
Yep.
And learn from the past, right? So avoid panic-driven decisions during economic uncertainty. Anything else there, Neal?
No, I think, if you have so much money, like you got hundreds of millions of dollars, you definitely probably want to put it in, I'd say, multiple countries.
Yeah. That makes perfect sense too, right? And like any good financial advisor would recommend that too, right? Like even if you're buying ETFs or mutual funds or whatever it might be, a good one is gonna have a strategy for you to have U.S. equities, Canadian equities, international ones, right?
Yeah.
Emerging markets. So it just makes perfect sense to diversify, like it does in many facets of life.
Swiss banks.
Yeah, Swiss banks. You still like them, eh?
Yeah.
For sure. Cool. Anything else, Neal? I think we covered that one pretty well. That was an interesting discussion.
Yeah, it's interesting to think about. I think some people are like, that's fully false. Like there's a chance that everything goes to hell. And I guess there probably is. I'm curious to see. I'm still, you guys have all heard me. I think we're going to see some craziness in the next 24 months.
Yeah. I'd argue we already have seen some craziness in the last, maybe not as much close to home here, but, in Canada, US for certain we have.
Yeah. And I want to see what pulls out of it in both Canada and the States.
Yep.
So
it's going to be a fun ride. Hang on.
Fun, maybe not the word. It'll be a ride.
It'll be a ride. Thanks, everybody, for listening.
Talk, guys. Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan McNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.